In this video, we'll take a look at the ADX, which is also known as the Average Directional Movement Index. It's an indicator that Forex traders will use in order to measure the strength of a trend. It represents the average price ranges that are expanding or contracting over time. It shows a line that moves up and down, as you can see at the bottom of the chart, showing you whether or not there is strength in the movement. It doesn't define the direction, it simply shows the strength of a potential trend or move. It measures the moving average of expansion of price during a specific amount of candles, typically 14, and that's what this one's set to. That's your default setting. Should also be noted, just for educational purposes, there are two other lines, the negative DI and the positive DI, and they also go on the chart. Now, most traders don't use those. It's basically used with the Bill Williams system, and truthfully, later on in his career, he started to suggest that he didn't use them furthermore. So if you're going to go down that path, then yes, it may be something to look into, but the majority of Forex traders, probably 99% of them, don't even pay attention to it. So it's all about the ADX itself. You need to understand that there are certain levels that people will pay attention to. So for example, from 0 to 25, because we are bouncing between 0 and 100, this is topped out at 64 here because that's as far as we've gotten. So there's no trend, or pretty much non-existent, right? From 25 to 50, you have a trend. It's reasonably strong. 50 to 75, very strong trend. And 75 to 100, extremely strong trend. So obviously the higher the better. Now again, remember, it doesn't matter which direction the market's moving. So take a look at this. We're going down here, but we're going up here. That shows you that we are picking up strength, right? It works on all time frames. It just measures 14 candles. Doesn't matter the time frame. And it can be used to give you confirmation as to whether or not you should stay with a trend. So, for example, as this is selling off, this is rising. So what this is telling you is that price is expanding over the last 14 candles. That means that we're seeing more conviction, and you can see what happened. Now, on higher time frames, it's quite often used to determine, hey, should I be thinking about taking profits, or should I be thinking about letting profits run? Now, notice that the ADX is right here, like when we gapped up on the weekly chart, you can see that it's at 26.552. So that is strong trend. And then as time went on, we started to rise here, and we ended up right around 61, right around here at the top. So this entire time, you could have let your profits run. Having said that, there's also concerns about divergence. So notice something here. We shot higher, we had this little bullish flag, and we rose. Well, look at how much weaker it is here. That's divergence, price going higher and a lower high, showing that maybe something's not quite right underneath. So in that scenario, if you are in this, it might be time to go long, or if you're already long in this, it might be time to take your profit. However, if you see this up here and you see this, you don't want to go long. You could think about selling on a breakdown below support, or just simply avoid it altogether, at least until we pick up some momentum. And you can see since then, we got a little bit of a pop here where the momentum picked up again, but it really has dropped pretty significantly for most of the last couple of years. So I got a little bit of a pop here in this area here, and now we're right back to abysmal numbers. So this also can give you an idea as to where you're going to get the most profits. Euro dollar is not it. It's a very tight and doesn't really move much type of pair, but it's a great example of how it can keep you in and out of it.